Welcome. If you want to unmute yourself and say hi, just so we can make sure your audio is all tuned in and working. Looks like she's connecting now. We're about to bring everybody back from breakouts, guys. So hello, hello. Well, here they come. Nice.
Oh, is that Jet over there dancing? What do you?
I love it.
Chocolate?
No, protein bar.
Oh,
All right, welcome back, everybody.
dude, Evan, look at that mustache.
She has the whole thing. It's like slowly gotten fancier. Her whole podcast setup is like it's gotten better and better and better. Her hair, how's your hair still look good? Dang it! Hair. She's fired.
Oh my
You guys
gosh.
didn't hear that Georgia opened up business for hairdressers.
I'm going to get my hair done today.
Exactly.
That's right.
Deb, in the South, we open everything up, right?
The restaurants are already open in Georgia. People are eating and dining in already. It's happening already.
Yeah, we had a guy break in and opened up a restaurant a few days ago in Houston and got the permission of the little town inside of Houston that he was in. And now the governor even said it, what, 25%, I think? So
Yeah, 25%.
yeah, so as long as you keep the 6 foot rule, they're opening up the restaurants again this weekend. So
Let's see if anybody's sick in 2 weeks.
yeah, that's going to be the case. So.
All right, you want to mute everybody out, Andrew?
You know, I guess we could do that, couldn't we?
Lots of background noise.
Yeah, we'll let people unmute themselves. All right. Hey, everybody, since this is streaming live and now that I just hit that button, we're even recording. We're just going to get this thing started. So, hey, welcome everyone. Excited to have you all with us. And there's a couple of you who actually, this is your first XChange call. There's just 1 or 2 of you, I think. This is your first, but many of you have been on 1 or 2 of these, and a number of you have been on 3, 4, 5, 7. How many of these have we done? It's hard to keep track, but a lot of cool things are happening. And I just want to say the reason so many cool things are happening is, really 2 things that we've seen in your survey. One is that you're recognizing the power of this community and the power of conversation. And you're telling us, hey, we'd love to get into more of these collaborative conversations. Hopefully, for those of you who joined on time, you were part of the most powerful 1, 3, 5, 7, 15 minutes of networking that you've ever been a part of, and got to see a half dozen or so faces. Maybe you met someone new or saw someone you know. And we're gonna actually go into a structured activity with everybody now. And I wanna introduce if you're new and haven't met Adair and Michael, who are now part of the Second Nature team in putting on these events. They're going to help us get into a very quick, collaborative, connecting conversation. And after that, we're going to bring John Burns on, and he's going to present some amazing insight. And we'll get you back into conversation after, which we think you guys are really going to love what comes out of these conversations and putting this all together in a way that enhances every part of it. So with that, I'm going to give it to Adair, who's going to give us some quick instructions as we go into that.
All right, super cool. So we are going to jump right in for the sake of time. I'm really curious, though, just so I know who's on my screen, just raise your hand if you have been on one of these calls before. I see some familiar faces, and raise your hand if this is your first time on a call with this particular group. All right. I don't know if I see anybody. Maybe it's some of the folks that don't have their camera on. So welcome. We're super happy that you're here. I love that we have so many people that have been here before, because you know how these conversations work and how we kind of roll through our session today. So everybody just hold up your pen, because I'm going to get you into some reflection really quickly here. And if you have something to write on as well, you know that we always do a little bit of reflecting before we go into our conversations. So I want to ask you guys, how many of you have ever had a hunch or an insight or an instinct to follow through or move forward on something that maybe your logical mind didn't necessarily agree with? How many of you ever had a hunch or an insight and maybe taken action on that before? All right, awesome. So most of you. Well, what I'm going to invite you to do right now is to reflect on the story of a time when you had a stroke of insight or a discovery, or an unexpected aha moment that enabled growth or success or change, or maybe even a new direction in your business. So I'm going to invite you to reflect for a moment on that question. I'll repeat it again for you. I want you to think of a specific story of a time when you had a stroke of insight or a discovery or unexpected aha moment that enabled success, maybe a change, a new direction in your business. And I'm going to throw on some music and give you about a minute or so to reflect before we go into our breakout rooms. All right. So what we're going to do now is Andrew has been putting together some breakout rooms of 3 or 4 people. We're going to move you into those groups in just a moment. You'll click the blue button to go. And everybody in the room is going to share their story of insight or hunch or discovery that created some type of success or new direction or change in their business. So that's going to be the first thing. Briefly introduce yourself, say your name, where you work if you don't know each other. Share your story. Everybody shares their story. You're going to have about 5 minutes in the room together, so it's going to be pretty quick. So everybody be concise and tight in your story sharing. And then if you have time at the end, any lessons that you learned from that time where you had a stroke of insight or a hunch in your business. So the first thing you're going to do when you get in your rooms, introduce yourself, share your story, make sure it's a minute or less. And then if you have time, you can go back and share any lessons learned or insights from having followed that instinct or that stroke of insight. All right. So we're going to move you into breakouts now. There will be a blue button on your screen that you can push, and we will see you back on the other side in about 6 minutes. About 6 minutes for your breakout. You want to do some teleporting? Put your hands together. Put your hands together. Wave your arm. All right. I went and had to come back like really fast.
Yes, yes.
It's all good. That's
We're
awesome.
admitting John Burns.
Cool. Hello.
All right. Oh, John, sorry, you're muted upon entry here.
Can you hear me okay now?
Yeah, we got
We
you.
got you.
Hey, John. Nice to meet you. I'm Adair.
Nice to meet you too, Adair.
Yeah.
John, right now we've got 12 or 14, I don't know, something like that, miniature Zoom rooms that people are in small groups having a conversation in. And
Okay.
we're going to bring them back out of that in probably about 5 minutes. And we'll get some quick feedback on what happened in those conversations, and then we'll introduce you and you'll be ready to start.
Okay.
I'm also going to give you permission to share your screen.
All right.
Knowing you've probably got some slides or something you're going to share. So
It tends to make my life easier, yeah. Let me close all the junk I got open and just keep everything else. All right, so if I shared this and did this, could you can see my slide now?
Yeah. Mm-hmm. Yep.
That's right.
Okay.
Yep, everything's working perfectly.
Cool. Awesome. Thank you.
Hey, for all the YouTubers, they're getting like a sneak peek here, right?
I just got a weird message. Can you still hear me okay?
We can hear you fine.
Yes.
Okay. I don't know what that was.
Perfect. And John, we'll have you pause sharing screen, but we'll have you bring that back up in just a couple minutes. Perfect.
Yeah, in about 2.5 minutes, I'm going to broadcast a message to let them know we're going to bring them back in 2 minutes.
All right, I'm trying this again. Can you hear me now?
Yes.
Yes.
Yeah, I've got this really expensive speaker that works a lot better, but it was kind of going on the blank there. So.
No worries. All right.
I'll be right back.
Cool. Oh, it looks like Devin is joining us. Devin works with John, so I'm gonna
Nice.
let Devin come on in. And did you want me to broadcast a message, Adair?
Let's give it another minute or so.
Is it a 1 minute warning or 2 minute? I'll type it out.
So we're at, when this goes off, we'll be at 5 minutes. So if we give them a 1 minute warning and then do the bring back from breakout after that.
Perfect. I see Devin's connecting to audio. All our YouTube friends right now are like getting a behind the scenes peek.
I know,
at
right?
what it means to digitally facilitate these kind of meetings. It's kind of cool.
Especially when you don't have everybody in the main room and you put them in rooms to have conversations. It's a little bit different.
All right. Should I go ahead and send the 1 minute? Or is it 1 minute till 1 minute?
Go right ahead. Say
All
1
right.
minute, and then we're going to close the breakouts. And do you have it set on 30-second return or a minute return?
I think it was 60 seconds.
Oh, perfect. Even better. Well, there's Devin. Let's see. Let's make sure her audio's. There we go.
Hi, Devin's
Devin.
on the line.
Hi, nice to hear your voice. We've seen you for a minute,
Hi.
but nice to hear your voice as well. I'm Adair.
Nice to meet you.
Nice to meet you as well.
So Devin, just to explain
And
what's going on. Hey,
Yes.
how's it going?
Hi.
We've got, I don't know, a few dozen people that are in these like miniature Zoom rooms now that are magically going to get teleported all into this room in about, I don't know, 90 seconds, something like that. And John's obviously here with us. So we'll kind of debrief the small group conversations that have been happening over the last few minutes, and then quickly move into introducing John. He'll present, we'll do some brief Q&A. And at that point, you guys are welcome to jump off for just the 25, 30-minute section we had John here for. If you guys want to stick around to hear what these people are talking about afterwards, you're certainly welcome to. So invitation, not obligation. And we have another audience of, I don't know, usually a few hundred people end up watching the stream of this. So we're actually live on YouTube at the same. So anyway, there's a small meeting, there's a big meeting, there's a stream of the meeting. There's like
So
4
high
meetings
tech.
happening. We're in a 5-dimensional universe right now.
So cool.
Yeah,
It's great.
Perfect.
cool. I'm gonna go ahead and close the rooms, Adair.
Great. We'll bring them back. And so in the rooms that while he's bringing them back, I'll tell you, everybody is connecting on a story of a time when they had a stroke of insight or a sudden discovery or unexpected aha that enabled success or a shift or a new direction or a change in their business. For sharing stories. All right. Welcome back, everybody. Welcome back. Welcome back. We're all still here. Got a few new people with us. Welcome back.
Welcome, Eric, Leanne, Tim, Trent, David.
All
You
right.
threw me in there with Tyler and Leslie, 2 Second Nature folks. So they just listened to me talk for a good 5 minutes straight.
That's awesome.
I knew Trent would have no problem in that situation.
All right. Welcome back, everybody. Good to see everybody coming back in. So how many of you made a new friend in your breakout room? Show me your hands. Or how many of you reconnected with an old friend? Maybe you found an old friend in there as well. Super cool. It's really great. All right. So I'd love to hear from 2 or 3 of you. And if you would like to, you can either physically raise your hand or you can go on the bottom of your screen at the bottom where it says participants. click participants, and there's a way for you to actually raise your hand down there as well. There's a button that says raise hand. But I'd love to hear from 2 or 3 of you sharing any lessons that you learned, or maybe anything else that inspired you from your breakout group. Any lessons that you learned from that time that you followed that stroke of insight, or perhaps anything that inspired you from your breakout room. I'd love to hear from 2 or 3 of you. Oh, we don't have a raise hands function. That's great. You can just physically raise your hands. By the way, great job of everybody having their cameras on. That's amazing. It's always good to see your faces. Who would like to share? I'd love to hear from 2 or 3 of you. Carrie, go ahead. I'll unmute you.
You know, I just love you guys. Did you unmute me? Are we good?
Yeah, you're good to go.
Okay. You know, just what a blessing to have all of you. And I just keep finding optimism from these. And Teresa from Atlanta, because it's just been such a roller coaster for me personally. The compassion that Kevin from Southern California talked about is something that I overly get into as a landlord that knows all my 16, folks in the 16 doors. And to hear Teresa say she continues to see opportunity in this unprecedented time, I really thank both of them. So those are my insights.
Awesome. Thank you, Carrie. Thank you,
Sure.
Carrie. Appreciate that. All right. I think we got Rashad. Hold on one second. There we go. You're unmuted.
Hey there.
Hey.
I was in a good group with a great gentleman, Dave, I think Michael and Nick, if I'm not mistaken. But I was just impressed with the resolve, the determination. Everyone is kind of in it for the long haul. We was talking about how this market and the rent collections in May and June may weed some part-time folks out, realtors who are unsure, never have been through this before. But just the resolve and really the professionalism of seeing it through, and the optimism is going to be, no mistaken, we think it's going to be, a challenge, if you will, but I think everyone seemed to be ready for the challenge.
Awesome. Thank you. Love to hear from one more of you so we can quickly turn it around to John. Who would like to share any final thoughts around lessons learned, something that inspired you from your group? Love to hear from one more of you. Who would like to share? Maybe it feels really intimidating to be the last one right before John goes in. Anybody else like to share? One or two more? Thanks, Trent.
I'll always speak. So I'm just learning from this whole ordeal is that when we were in the office, I actually didn't see it as much, but now that we are all separated in our own little homes and stuff, I'm seeing the value of our team and who has the most value and who is not showing as much value pretty clearly. And it's just going to result in moves. Now, it may not be for another 60 to 90 days from now, but we will be probably making moves based on the fact that we're using technology more and we're able to do more with less people. And as a property management company owner, that's going to be more profitable for us. And I don't think I'm going to wear out other employees by over giving them too much work. It's just, this is really shining the light to me on a few positions that I could not see when it was straight in my face, but now I can when everybody breaks away. So it's just giving me a better look at my company and through that format.
Awesome. Thank you for that, Trent. Appreciate you. All right, Andrew.
Perfect. Yeah, perfect. Awesome, everybody. Well, hey, great way of getting started. And John, we're about to hand it over to you. Before we do, I'm going to give you a totally insufficient introduction, but it's going to be short and sweet. For everyone who didn't read maybe the longer description in the email, or you haven't gone to John Burns Real Estate Consulting website, John is, and not just our opinion, really considered, he and his team, an authority on data and market trends. And specifically, they launched the single family rental index late last year, which so many people are, eager to see on a regular basis. We'll give an update on that later. A way that you can actually participate and receive that survey. But John has some tremendous insights to share with us and some great information, and it'll facilitate a great discussion at the end. And what we'd like to do is encourage you. I think we're gonna change the chat here function here so that we're not all distracted by it. But what'll happen is you can submit chats to the host. We're gonna compile all those, John, as the questions come in and kind of curate those a little bit, and then I'll copy and paste them all to you at the end of your presentation, and we'll have a few minutes for some question and answer. So that's kind of how this thing is gonna roll. John, we're gonna hand it to you. You're welcome to share your screen and get started.
All right, testing the technology.
There we go.
So you can hear me and you can see the screen. Is that correct?
That is correct. And it looks like, yes, there we go. That's perfect.
Yeah, and thanks for the nice introduction, but Devin Bachman, who's listening in, is the one who does all the work. I just get to present it and take credit for it. So what our business is about is trying to figure out what's going on in the housing market for all of our clients, whether it's building homes or building products or single family rental. We have a lot of people that play the stock market. We don't do any of those things. We don't do anything on commission. We're just Switzerland. We're trying to get it right. So I'm going to give you an overview skewed towards single family rental on what we're seeing. I won't learn anything over the next 20 minutes listening to myself. So I'm looking forward to the Q&A, and particularly where you might disagree with me or see something different that informs me and makes us better. So I'll just go through this quickly. I wanted to start though with one thing that Andrew mentioned, which is that we started a single family rental market index, and we're also doing a single family rental landlord survey. It's literally like 2 questions, takes a minute. If you just want to email Devin Bachman, you can participate, and then you'll get the results with everybody else. And one of the things we've been trying to do over the 8 weeks that we've been doing weekly webinars and updates, we started a pulse survey. Hopefully, everything was pretty bad when we started it, but hopefully we start to call the bottom and we see some green shoots, and we are seeing some green shoots, particularly in the home sales side of things. And a little bit on the rental recovery, which looked pretty bad early in April and looks a little bit better right now. So that'll help you with the decisions you have to make. So one of the things that we figured out from talking to our clients is that we're talking timelines, but we're not always talking the same thing. So timeline for a lot of people is about the health crisis and the global crisis and when can we get out of our houses. That doesn't necessarily mean the same time as our business recovers. It is a US crisis, obviously, but we're finding, and it's even differentiating itself more than I thought it ever would, that this really varies a lot by geography. It's varying a lot by life stage. It's varying a lot even by political affiliation. It's amazing how much things are varying by location. And we're seeing a little bit of a housing pickup right now. And there's some interesting things going on with people hating their house, wanting to get out of an apartment. Now it's my time to actually go buy a place. We're seeing that kind of green shoot. We also very early on saw people wanting to get out of apartments into single family rental homes because those are less dense, nicer places to live. But at the end of the day, I think we're going to wake up and realize, even if we have some good things along the way here and some of this government stimulus, hey, we've got fewer people employed than we used to, and that's going to impact a lot of things. Much more beneficial to the rental side of the world than the home ownership side, I believe. So the timing of all of this matters. And one of we have, I should mention, we've got a large company that's got a big subscription business where we're tracking risks and data all the time. And we've been flagging some high risks going into this, had nothing to do with the coronavirus. But our conclusion was that because of those risks, there was a 75% chance that we were going to go into a recession in the next 2 years. That normal chance is 27. So I just want to share with you what some of these risks were, because they are going to impact the recovery. So we had a record high stock market, as you know, with more people than ever actually borrowing money to buy stocks, which is risky. We had a record high level of companies that were not very high rated borrowing money, private market companies and public. We had record high unicorn valuations. We had record high auto debt. We had record high student loans and record high non-bank mortgages. Now, I'm not pointing this out to make you depressed. I'm just telling you what has happened is causing stress on all of these things that is going to make it harder for us to recover. If this had happened in 2015, we would not have had any of these things, and it would be a much easier and quicker recovery. So, with much of the world closed for business, I've never seen this before. So we're really trying hard to figure it out. One thing I want to point out is this is the U.S. employment by sector. And the first two to go down were obviously leisure and hospitality and retail trade, and they're still down for the count. So that's about 20% of all the employment in the country, and it's significant. But I'm still hearing that, well, okay, well, this has just been an impact on those people mostly. But as the March 31 payroll hit, the April 15 payroll hit, April 30 payroll is coming up later this week. All these other companies, particularly the ones in orange, that rely on some sort of transaction, whether it's going to the doctor or getting your hair cut or even lawyers and title companies and escrow companies are all getting hurt. So, and this is not just the low income, this is across all sectors. So that's what's starting to change. Small businesses are the ones that were getting hurt. And interestingly, the government has done something I never conceived with some of these programs to rescue small business. And I really think it's going to make a big difference. But heading into this, small businesses, 21% had less than a month of cash in the bank. Another 34% had 1 to 3 months of cash. That's why the implementation of this PPP program is so important to save the jobs at these companies. And as you know, almost half of America was entering this crisis living paycheck to paycheck. A lot of these people who went on unemployment really had to live on credit cards and things for a little while, but now the unemployment is kicking in, and 64% of them are actually have the opportunity to make more than they were making beforehand. So this is just a very interesting situation where, as of next month, a lot of the unemployed people, the majority of them, are going to be making the same or before than they were employed. So that's a much less distressful situation. That also means they can pay their rent. So they may have asked for forbearance while they were waiting to get the unemployment check, but now they shouldn't be asking for it if they're getting enough money from the government to pay their rent. But these economic recoveries take time. We'll go back to work, then we'll get an economic recovery. But if those two things happen, that doesn't mean the housing market has stabilized. There's enough forbearance to fix. There's enough excess debt on properties to fix. That takes some time. And so that's the clarity I wanted to provide on the timelines here. And it really was the end of 2005 when the housing market peaked last time, and 2006 and 2007 were pretty bad. And then we had the Lehman Brothers. It was 2010 before we got back to work last cycle. So these things can take a while. But the single family rental business, which is the business you're in, continues to grow. It's been growing this whole time. It was the big beneficiary of the last downturn. The rental occupancy has picked back up to normal. If you look at it nationally, we're only at a 6% vacancy, which is the best it's been in a very long time. So it entered this market very healthy. The index that Devin runs, that we do in a partnership with a brand new group called the National Rental Housing Council, was showing that the market was extremely healthy. Leasing was strong, expected leasing was strong, occupancy was better than a year ago. Rents were up 4% year over year as of January, but that varied from being up 2 in Cincinnati to being up 10 in Phoenix. So if you're up 10 in Phoenix, clearly that's a very undersupplied market. That's a lot of where the build for rent activity that we've been working on has been going on. Clearly those rents are not going to grow as much, but that's how we entered this. And the occupancy varied by market. I figured each of you are in 1 or 2 or 3 markets. You might want to find some of yours on here. So that's why I have this data. But during the greatest recession in 80 years, half of the markets saw rents increase and the other half saw them decrease. But you're talking about a 3% decrease in Phoenix and Atlanta. That's not a lot of distress. And a lot of our money clients have looked at this and said, hey, this is where I want to be for the long term. I want an income cash flow yielding asset backed by a house that's an inflation hedge too. So we were seeing a lot of money circling the business before this. we're probably seeing even more money right now saying, hey, I know the short term here is going to be tough, but this is going to be where I want at least a portion of my net worth over the long haul. So in the last 3 weeks, we've started to see some green shoots. This whole time, our clients, our building products clients who sell products that are do-it-yourself remodeling have just surged. Like paint sales has gone through the roof. And then actually new home sales probably fell about 85% over a 4-week period. It's doubled since then. So we are seeing people, I think Devin had a great quote on CNBC when she was interviewed yesterday, something like the new homes are clean, they're available, they're well designed, and the people are moving in. So sales are picking up. And everybody is focused on the unemployment piece. But a recent survey by Gallup is showing that, yeah, 25% are concerned, but that also means 75% are not. And I think it's only like 1 out of every 200 households moves every month. And even in the worst times, it was 1 out of 150, or excuse me, 1 out of 250. And the best times is about 1 out of 150. So it only takes one. If we had 1% more people or 1% of households saying we want to move, we're finally going to move, that we could have a really good quarter. And all the focus has been on these industries on the left here, airlines, hotels, retails. We're coming up with a list who those other 75% are, because they're not in the headlines, but we're talking to people all the time. I'm in grocery, I'm in distribution, I do something online, I supply work from home, even pizza delivery is doing great. So there's a lot of businesses out there that are doing well. And then people are just sick of their tiny apartment. And this has been a real stimulus for people that are in something they don't really like. Staring at a kitchen that is 25 years old, pulling out Architectural Digest and saying, boy, I wish I had something that looked a lot nicer. I'm going to bring this back, but this is dating myself. But, Martha Stewart went into house arrest for a while and came out with a couple TV shows and even a partnership with KB Home to design a better house. So even people sit around their house, look at their house and are looking for how can we make this better, or should we move? The timing of the stimulus, now there's a lot on this chart. I presented this the other day with a whole slew of charts, and this was the conclusion. But what I want to point out is in the second quarter, which is that over on the left there, there's just a ton of stimulus hitting right now. There's the $105 billion for the Families First Act, but that only goes for 12 weeks. There's the $350 billion PPP for small businesses that just got up to $670 billion, but that'll increase, that'll pay payroll for 8 weeks, but then it ends. The stimulus checks have pretty much already been received. There's an extra $600 a week now for unemployment insurance. And then they're talking about student loan, mortgage, and rent forbearance. But the point here is these all have expirations. And so what I am watching is that if we have really things turn around pretty quickly here, we have to pay attention to, well, what happens when the 8 weeks of payroll runs out, or what happens when that extra $600 a week in unemployment runs out. So I'm just want to caution people not to get too giddy that things aren't as bad as people thought, because there's a pretty good chance for a second leg down here unless the government stimulates some more. And employees have been people have been whipsawed. You're fired, but now you're making more money that you've been fired, and here's some more money from the IRS, and your company now wants you back, and maybe you do or don't want to come back. It's just a crazy time out there. But this is what our chief demographer came up with. This is the income categories on the left. Most people make less than 60 grand a year. 64% of them, all of those people would make more right now on unemployment than employment, which is just an amazing thing to think about. And the plunge in job losses has been huge, but with this PPP program coming back, you're going to see a lot of them come back to work very quickly as they open retail and restaurants, which I'm a little suspect on, because retail and restaurants can't make money at 70% of their revenue. They need to be back at 90 to 100. So it's going to be interesting how they get through that and how they restructure their lease and how they restructure their debt. but you are going to see the headline news, at least on unemployment, I'm certain get a lot better once this PPP money kicks in. So our view, because we've been talking to all these people about shapes, and the V's and the U's sound really great because they sound like you're back to the top of the V, but we drew something a little more like this, and I drew it, so I apologize for my bad artwork. But it looks more, to me, it looks more like a reverse J, and we may be getting near the bottom here pretty soon. We'll see a nice little recovery, but then this is going to be pretty lumpy for a while, and that's how we're looking at it. You know, there's all sorts of uncertainties that I don't need to read here that are going to impact things positively and negatively. But we're seeing a lot of dry powder ready to deploy. I mean, and they don't want to buy 10 homes, they want to buy 10,000 homes. It's just, we hang out with some guys with a lot of money. You know, the securities investors are waiting for deals to come. The public builders have plenty of cash. In fact, that's one of the more interesting things in this cycle is that the builders were not overbuilding in most areas. They're well capitalized. You're not going to see all these brand new vacant homes sitting around empty in a distress sale. And also the mortgage forbearance, which they're just starting to get some good color on this. They've structured the mortgages now where basically if once they get past this period where they scare the heck out of the borrower, which they're doing, which is sad, the rest of it is once you get your job back, we're just going to restructure something to keep you in the house. So I don't believe we're going to see nearly the level of distressed sales. We'll see more next year, but not nearly the level of distress as we saw last time, even though the job losses or temporary job losses are going to be more. And then there's too much on this, but I figured you might want to find your market. But this is the last three recessions, 90, 91, 2001, and then the big one 12 years ago. You know, this is job losses at LA and huge losses in LA and San Francisco and the first two. At the same time, there were job gains in Las Vegas and Riverside. So I'm not going to tell you that the housing market behaves the same across the country. New York actually lost more jobs in the 90-91 recession than they did during the great financial crisis. So you got to be careful of jumping to really quick conclusions. And then if you look at price changes, how Las Vegas and Riverside home prices fell the most in the last downturn, but Texas home prices hardly fell at all. And if you look at prior downturns, Texas home prices actually went up. So again, this is a very, very local decision that you're going to have to be making. I believe, and I don't think this is contrarian, I think this is consensus. Single family rentals are going to be the first sector of the housing market to recover. It's probably the best long-term play. Rental defaults will be painful in the short term, and I heard some of you talking about that as we got started here. But one factor is there's not a lot of newly built rental homes going on right now. I'll give you a heads up though, you're going to see some more because some of the new homes that were intended for sale are going to be rented out. So you're going to see some short-term increase in supply there, but it's nothing like the supply that you're going to see in the apartment market, for example, which there's so many apartments under construction. Capital seeking safety yield and inflation hedge is going to come in. And then you've got these big established companies like Invitation Homes and America Homes for Rent and Progress Residential, who are licking their chops ready to grow here. So I don't think home prices could, I mean, something really different than I'm seeing right now would have to occur for home prices to fall dramatically. So just hitting the conclusion slide, and then we'll go to Q&A. I think there's potential great news over the next few weeks and months, primarily because of the government stimulus, which I did not think would kick in by this time, but it is. The rental market is so far less distressed than most people thought it would be, and I think the stimulus is helping things. I didn't spend much time on this with you guys, but we've had some big hiccups in the mortgage industry. I think the disaster's been averted, but the marginal buyer is out. So you are going to see more demand for renter than you're going to see homeowner, unless the government comes up with some sort of home ownership package, which I would not be surprised to see. Last time they did a $10,000 tax credit twice to buy a home. I can see them doing something along those lines. We are monitoring pricing and rents. Both demand and supply is down in pretty much every market in the country. We're seeing price and rent softening. The only Places I'm really seeing the prices are definitely down is in the high price points in coastal California. Everything else maybe is down a little bit from the beginning of the year, but up year over year. As I just want to point out, the conclusions have to be made market by market and submarket by submarket. For any of you that want to subscribe to our research, the minimum cost is $2,500 a month. So we tend to play with the big companies, but we're collecting a lot of this and helping them with their big decisions. And I just want to end with be creative and identify opportunities, because just as I heard somebody talking about shifting their business, that's exactly what all of us are going to be doing. And actually for me, the good times are great. I love to learn. And so this is the time of the cycle where I'm going to learn a lot. So I think that was all my slides. This again is Devin's email if you want to participate in the survey, and I'm happy to take whatever questions you've got.
Perfect. Thank you, John. We can leave that slide up. And also for everyone on this call or catching the stream, we will be emailing out to every single one of you a link to this survey. And John or Devin, just to clarify how this works, somebody spends 5 minutes to answer a few questions that's anonymized, to their company or market. But by participating in the survey, what they're going to get is the benefit of everyone else who's participating in the survey and the results. Is that how this works?
Yes. Yeah. It's 5 minutes once a quarter. You can do it on your phone.
Yep. And I can tell you, we love seeing it IMN and all the other places that we see this information presented, and it's we just want to highly encourage that. A couple of quick questions, John, before we let you and Devin go, is a lot of people are noticing, build to rent, and obviously you touched on this. I know you moved really fast, but can you go a little bit deeper on what you're seeing with build to rent in the single family space and what's happening there?
So about half of it is single family, but about half of it is attached. It seems to be a single story attached solution, or maybe 2-story townhome solution. So just to get the whole single family, multifamily thing out there, because one thing we've learned is that you don't get a great premium for a big yard. I mean, people want the house-like environment and a small yard. That's it. That's perfect. We are seeing different designs coming. Some look like those little resort home casitas you might stay in Phoenix, all the way up to a full-on detached house targeting a different type of renter, versus the young single professional versus the retiree. And the other thing that I don't think people fully appreciated unless they had ever rented in a owned home is that if you're the renter in a owner neighborhood, you're kind of the deadbeat on the street in some places. But if you're the renter and everybody else is a renter, it's got much more of a community environment. And then all of a sudden you've got a call center, you've got amenities you can share. It's just, it's like luxury apartment living, but without having somebody walking on your ceiling. And people thought that there was no demand for that, or it couldn't be run profitably. But now we've proven that it is. So I think this is going to be the big story over the next 20 or 30 years, the emergence of build to rent neighborhoods, just like luxury apartments have emerged over the last 30 years.
Mm-hmm. And we'll do one more here, John, which is, can you give a couple other just creative or interesting examples from the data you've seen? I know you guys have done stuff with like U-Haul data and ways that you triangulate, certain data points. Could you share just a couple kind of creative or interesting examples of what your firm, Devin and crew, put together? Yeah,
so the migration data from the Census Bureau is just terrible. So we price out renting trucks from U-Haul from New York to Orlando and back, and we do that year over year and quarter over quarter. So we try to sense whether migration is picking up or not. It is. We haven't done it. We're not doing that week by week, but actually one of our team members, her uncle is a congressman and is on the Economic Recovery Committee. So we did a little paper for him to help with that. And that was one of the things we said that they weren't thinking about was people are going to move like crazy as soon as you open up things here, and they're already doing it, and you need to accommodate that and let that happen. So we're going to see I think we're going to see a lot of moving. I know we're going to see a lot of it.
Interesting. Great. Well, John, thanks for going a couple minutes over for us, and certainly any other questions or feedback. Is the best way for people to stay connected? We see Devin's email here, but your guys' website or?
Yeah, my email is just jburns, BURNS @realestateconsulting.com, and realestateconsulting.com is our website. We do a Friday email that's free, and it's the light at the end of the tunnel. And we do have a podcast that we do twice a month, and a bunch of other things that are available for free as well.
Perfect. Great. John, Devin, thank you guys so much. And we look forward to our next conversation with you all.
All right. Take care, Andrew.
Awesome.
Perfect.
Hey, before you jump off, I would love for everybody, if you have another minute, to just type in the chat, what was your biggest appreciation or takeaway from what you heard from John? So you'll just take a moment and type in the chat something that you appreciated, or even something that you learned that was kind of an aha moment for you in the chat, as a way of thanking John for his time and reflecting back to him what you've learned. Something you appreciate or your biggest takeaway. Are you guys there? Is the chat on?
I think most of the chat's coming to me, but here, I'll read a few off.
Sweet. Okay, cool. Thank you.
55% of businesses only having capital for up to 3 months. 25% of employees worried about job loss, that it's only that amount. How the rental market will be stronger the next few months. Rental market shouldn't be as bad as everyone was anticipating. There was some reassurance from what was shared. Migration, and people are wondering, is that going to be more to urban centers or suburban or rural? And yep, I'm seeing more of the same points being shared here. So
awesome. Well, thank you
Perfect.
so much, John, for your time. We appreciate having you here and all your insights.
Take care. Thanks.
Awesome. Wonderful. So now that we've all had a whole bunch of information come into our brains, it's impossible for us to really make that go in and come up with new thoughts and actions and ideas for how we can move forward until we take some time and do a little bit of reflecting and then connecting again in our breakout room. So everybody, first of all, everybody just put your arms out, shake them a little bit. And we're going to take a big inhale together. Here we go. And let it go. Yeah, there's a lot of information we got right there. And if everybody will grab your pen and show me your pen. Let's see what kind of beautiful pen you have for writing notes. Awesome. Cool. So I have a couple of questions that I'd like for you to reflect on again, so you can take all of that information that you just got and take it inside and make it real for you before we move into the breakout groups of 4 or 5 here in just a moment. 2 questions. So you may want to write these down, or just the high level words, keywords from these questions. So the first question is, what insights from John were most meaningful or useful for you? What insights from John were most meaningful or useful for you? That's the first question. And then the second question is, what opportunities for action are you seeing based on what he shared? So 2 questions. The first question, insights that were most meaningful or useful, and then any opportunities for action that you're seeing based on what was shared. So I'm going to throw on some tunes for a minute or so and invite some reflection before you go in your groups and share with one another. About another 30 seconds, then we'll move you into your groups. All right. So what we're going to do now, and if you're not done writing some of your thoughts down, that's okay. You can kind of think out loud when you go into your breakout groups. We're going to move you in just a moment into groups of 4 or 5. And we have a 3-step process that you're going to go through. The first thing you're going to do is share your insights. What were the big takeaways? What were the big aha moments from what John shared? The second thing you're going to do is everybody share your actions. You can go around, everybody share insights first. That'll be the first step. The second step is to brainstorm the actions that you can take based on those insights that you've gotten. And then the third thing that we're inviting you to do is to come up as a group with the top 2 or 3 actions that you can take moving forward. And what we'd like for you to do, some of you participated in this last time, is to pull up either a Google Doc or even just open up an email. And we're going to have you capture those 2 to 3 ideas and then send them. We'll give you an email in the chat, but when we come back from the breakout groups. So let me just go over those 3 steps again. Step 1, everybody share the insights that you got from John. What were the top learnings? Second thing is everybody share your actions in the next round. And then the last thing as a group is to land on your top 2 or 3 actions. There's going to be 4 or 5 of you in the group, and we're going to give you about 12 minutes total to do that. We're going to give you about 12 minutes total. So make sure that you keep your sharing time tight, because you'll need some extra time to come up with what are those top 2 or 3 that you're going to share on a Google Doc or in an email. We're going to give you an email where you can send that. We did that last time. It was a great way to get lots of ideas that we can share back with you. So we'll put you guys in the breakout groups right now. You can share your stories and then come up with your top 2 or 3 actions.
All right. People are moving to their breakouts. And hey, all right. We've got you guys here in the main room. So Hunter, Dee Dee, Michael, and Sherry. How you guys doing?
Great.
Awesome.
Moved up to the main room. Wow.
That's right. You're live on YouTube. It's happening.
Ooh.
Dee Dee's like, why do I always get stuck in this main room? It's luck of the draw, Dee Dee. Luck of the draw. Hey, I'm gonna just move to the background here, but yeah, if one of you want to figure, one of you wants to figure out who's going to take notes and jump in the discussion, I'll be just a moment away if you need something.
Okay.
Bless you.
I don't mind. Thank you. I don't mind taking notes.
Okay. Thanks, Dee Dee. Appreciate that. Okay, so does anybody want to go over like what they talked about, an insight that we thought from John, and what opportunities we might have action-wise for that, and then we can group together a couple of items we think for property managers?
I'll say one of the insights I got was, it was already repeated, that's only 25% of those polled were worried about losing their job. The other thing is, I think they said that the rent collection was only down like 4%, if I caught that correctly. So I know it's market specific, but that was a little surprising too.
Okay, and so do you see any opportunity in that? When you mentioned that, like that was an insight that you saw, what type of opportunities do you think for you action-wise that you can do, knowing either of those things?
I don't know how those necessarily can be action items, other than the fact that we have this opportunity to brag to potential clients about what our collection rate is during this pandemic in uncertain times. I think it speaks volume of our collection or our screening on the front end. So I think that's an opportunity.
Right. Okay, good. Okay.
I was kind of surprised to hear that more people were going to want to move. I was thinking more people would want to sit tight for a while before they made a move.
Right.
So if that's the case, then it will be a good point to use for investors to buy more properties and, other owners that are thinking about renting, to encourage them to rent, that there'll be, a big market for it.
Yeah, that's an interesting point, Sherry, you bring up, because you're right. Normally, when you have times of instability, you don't normally think of people moving around a lot. If you have an unstable job market, normally people aren't talking about you moving around a lot, maybe downsizing possibly, but not moving around. So I was a little bit surprised, but I think he was talking about the regionality of things. And I know that when he was talking about how in the last recession, depression, however you want to term it, in 2008, when he talked about like the rents going down in Atlanta by 3%, I can assure you that in my area in Southwest Florida, they went down by a whole lot more than 3%. Like you could talk about values losing 40% in a year. So, and then the second year after that. So, but it's interesting that, yeah, I thought that was surprising too, that he thought that more people might be moving. Now, maybe that's along the lines of like moving state to state as opposed to one part of the town to another part of town. So we didn't really expound on that. Maybe that's the case. Did anybody else think that was the case? Anybody
Are you talking about rental values or sales prices that went down 40%?
Values of homes went down by 40%. The rental prices itself went down very steep. Yeah.
The ours kind of went up or stabilized during that time. Ours didn't really go down in the DC metropolitan area. They either stayed the same or went up a little bit.
Right. And that's right. And I think that so much of what's talked about for rental prices has to do with employment. You can't have rents increasing at an astronomical rate unless people are employed, and theoretically their actual wages are increasing as well. So like in our area, when you had that recession and things were going up so rapidly, it didn't make any sense. I mean, for instance, if you're raising rent, say 10% every year, because the value is going up, there's a lack of supply of them, is the person that's renting the home or their income's also going up by that? Because if it isn't, you just realize that down the road, what's going to happen is something's going to give financially. It doesn't make sense. So that's what happened in our area, but it's a good point, Sherry.
I'm with Sherry on that. I'm in Greenville, South Carolina, and we didn't see much downturn in our market back in 2008 from a rental standpoint. And I don't anticipate much of a change in our market during these times either, really.
Interesting. Is that because?
Sorry, I'm in Atlanta.
Sure.
And I got that we were going up by 7% before COVID. And then the last recession, the rents went down by 3% in the Atlanta market. So to me, that means at the minimum, our rents should still be going up between anywhere from 4 to 7% now. So going back to Hunter's point of using this data to better educate our owners, you can assure your owners whatever numbers that you guys have got for your local markets. This is like concrete information we can educate them with. So I am going to write that down as an action item.
As far as using the numbers to educate your owners, Dee Dee?
Yes. Yeah. I don't know if you guys are doing like a constant contact or communication with your owners now to get information out to them, but I'm definitely thinking about putting together like a bump video or something and just say, hey, I got some information today, and for them to digest.
Yeah, I think it's a great idea. I don't know if you've done it before. We sent out an email when this thing first started to all of our owners, and I did a video, a bomb type video, I guess about a week ago, and I got tremendous feedback from the owners, how appreciative they were, and just, obviously just appreciate us staying on top of the ball. So if you guys haven't done it, I would certainly recommend you do it.
Yeah, anytime I get information that's relevant to our owners, I've been shooting like bomb videos to sending them to them.
So do you find, on that note, do you find that there's a big difference in reception or receptivity between emails versus videos? Do you think that some people, or the majority of them, like reading something as opposed to a video? And if you sent a video, how long were the videos?
I do both. The video, I think, adds a little personal, aspect to it. And the videos I try to keep for less than 2 minutes.
Okay,
And
fine.
then I also add in the email just a quick, hey, this is what this video is about. Yeah, it's been helpful, and I think we've gotten good feedback from owners appreciating the communication. Actually, now if they don't get it, they're like, hey, what's going on? We haven't heard from you. So it's a good thing to do for sure.
Michael, for me personally, I sent out an email and then I did the video, and I got similar responses. Both just thank me, tell me it's well done. But I'm ashamed to admit it, my video was 16 minutes long.
But you're good looking though, so.
I just wanted to get it all out there, and just, I don't know how many people watched it, but it was very encompassing, let's say.
Yeah, that's a shock, Hunter, because 16-minute video, you'd think that 2% might have seen it. 60 minutes is like an eternity today.
Oh yeah, for sure.
But that's amazing. So Hunter, though, that's interesting because did you send out the similar information by email and video? Like sometimes people will write up a script and then if you want, kind of read it in a video. Or was the video kind of you off the cuff, so to speak, just talking for 16 minutes?
Yeah, basically, most of the times we do transcribe our videos, but with this being so long, I didn't do it. And I kind of had, I don't know, maybe 8 to 10 points that I want to talk about, such as inspections, leasing, showing properties, our rent collection. I just kind of went through those 8 or 10 topics and just try to talk fast, but it still ended up being about 16 minutes.
It's hard sometimes to synthesize what you're saying in a concise way, but Dee Dee, obviously you do it. It's a couple of minute long video.
I break up the information in shorter videos.
Yeah, good.
So any other takeaways from you guys or action items?
Well, we've already touched upon it. We've already done it. I sent out my 3rd email to people. I'm not quite as photogenic as Hunter, I think, so I didn't want to send off a video to people. But what happened was that it was more like helping educate the people along the line with the process, because obviously there's a lot of misinformation out there. And one of the things that I felt that sometimes property managers forget is that we're people all over the world. So what's happening in Georgia versus Southwest Florida is totally different. I mean, you guys are opening up your state right now. New Zealand, friend over there in Australia, they're starting to do some stuff. Like they're allowed to go like 50 kilometers or something like that recreationally and drive. But for us, that's not the case. So I wanted to give the people that are, whether they're in the United States, Canada, Israel, or elsewhere, the idea of what's physically happening in Southwest Florida, what's physically happening to the schools, the parks, the restaurants, because everywhere it's different. So it was well received. I mean, even if people didn't reply back, and I think that the action item is just showing that you're there. As I mentioned to them, we've been in business for over 30 years. We don't even get worked up by hurricanes anymore. And because, when you go through a dozen of them, this is something much different. And I think that by showing that you're educating people and being consistent, compassionate, but also doing your job and explaining that to people so that they don't have to feel like nothing's going on. You're being proactive and answering their questions. I think it's been very, very helpful for the vast majority of our clients. So kind of like what you guys are doing, that's great. And I think, continue to do that, whether it's the new information we got today or just operational business.
Yeah, I thought that it was like a lot of information and I didn't really want to translate, things myself.
Right.
So I encouraged everybody to like my Facebook page, and anything I found that was helpful, from reliable sources, I just, fed those over to my Facebook page. So there were things for tenants on how to, look for their stimulus check. There were things on how to apply for unemployment, things for owners on the mortgage side. So I just fed all that onto there so they could go directly to the sources to get, the current, updated, accurate information.
Yeah, that's great. Anybody else right now, or?
What do you guys think about the growth pattern that he drew?
The squiggly line one?
Yeah.
I believe it. I mean, I think he's right, in my opinion.
Yeah, because we don't know when this virus is going to hit again, just like the flu, that you have your seasons.
Yeah. Certainly saw it do this straight down, and then I agree it's going to do that coming back up.
Where do you guys think we are now on the dip? Because he said we're already towards the bottom. Do you believe that, or do you think we're going to dip even more?
I personally think we're closer to the bottom than anything else. Well, I shouldn't say the bottom, close to the bottom. I think by the end of summer, we're going to get back to some sense of normalcy.
Yeah, Dee, I kind of agree with Hunter. I think we're not at the bottom yet. I think that's probably going to happen sometimes maybe later in May. And I think states like Georgia and the Midwest that have started to open up or opened up already, I think that's going to be a true bellwether to what's going to happen. So in other words, if there starts to be a huge rash of new illnesses and stuff like that in Georgia, that's going to cause pause for states like Florida. And I don't think we're close to the bottom yet, because first of all, we haven't really felt the economic, if you want, effect of the stimulus. I don't want to say damage, because obviously a lot of what they're trying to do is trying to fix the situation, and it will. But like I was saying, when people in the state of Florida haven't been able to receive unemployment checks and they've been unemployed for say 3 or 4 weeks, we haven't hit the bottom yet. We're heading towards there, but when they start receiving those checks, I think that's when it's going to start turning around. And that chaotic kind of bubble that he does, you're right. I think it has to do with the virus and what it's going to affect. And I think there's so many medical intangibles that are going on where there's no consensus as to what we're actually facing. So until that's done, a lot of people are going to be acting emotionally. And, so I kind of agree with this graph.
I think some businesses aren't going to be in a position to bring everybody back. So there's going to be that dip too, where everybody opens up, but not to the full degree. So there's still going to be those people out there that are looking for jobs because they can't bring everybody back in up to the same level they had.
That's a good point, Sherry. And not only that, I think you're going to see a ton of businesses just not open back up, period.
Yeah. Yeah, we already noticed. I don't know if you guys have Green Turtles. They're a chain in our area, and it's a relatively big chain, and they already put out notice they're not opening up their one in Annapolis. They're just going to leave it closed.
Wow.
That's tough to hear.
Yeah.
Very tough. Yeah, and it's interesting. He said the unemployment checks are going to be better than, when they're. So what's people's motivation to get back out into the job force?
Right.
With that, how long does that last? By the way, do you guys know?
I don't know.
39 weeks is what I've heard.
I think the extra 600 is only like maybe 12 or 16 weeks.
Okay.
And I think it goes back to normal after that, is my understanding.
Awesome. Hey, welcome back, everybody. Good to see everybody's smiling faces. Everybody give me a thumbs up if you learned something new or came up with a new action to take. Super duper cool. Awesome. So it looks like in our last 4 minutes, what I would love to hear, since we're down to a smaller core of folks, I'd love to hear from each group one big takeaway or action that you came up with, one big takeaway or action. And if you just want to go ahead and unmute yourself, please do this in like 30 seconds or less so that we can end right at the top of the hour. Who would like to jump in and share? Go ahead.
Dee here from Atlanta. We had Hunter from South Carolina, Sherry from DC, Michael from Florida. So we had a good representation of the different markets. But the action is we're going to use the data that we took today from John and better educate our owners by sharing through videos on the different information we got, why people are still wanting to move, what rent collection looks like, and what the percentage of rent increases are in our local markets. So better education for our owners.
Awesome. Thank you so much, Dee Dee. Appreciate that. Who's up next? Who wants to share your one takeaway in 30 seconds or less. Karen.
Our takeaway was the opportunities that are going to be present now for the rent to build projects and
Awesome.
the income or the money that's going to be available to possibly invest in something along those lines.
That's awesome. All right. Thank you, Karen. Who's up next? Go ahead and unmute yourself and share your biggest takeaway in 30 seconds or less. Who'd like to jump in? I think we got a couple more groups.
Just trying to figure out who's going to go first or who from their group's going to report out.
What do we have? 2 more groups?
I think, yeah, we'll take with time for at least 1 or 2 more.
I think that might get everybody if we just do 2 more. Biggest takeaway, action item from your group. Who would like to share next?
This is Richard. I'll jump in.
Thank you.
We did a lot. I mean, Teresa was awesome from Atlanta and Ben from Memphis. And really, I would just read her notes that would have covered everything. But for us, taking advantage of the short-term rental market, for us here, Mickey Mouse Town, and et cetera, the mom and pop. And then I'm following up on the past clients who were looking to try to get back in the market, these opportunities. So people who were on the sideline waiting for the market to clear, thinking it's going to be a drop off maybe in price, but now once the dust clears, being able to bring past and current clients back to the table ourselves and moving forward.
That's awesome. Thank you, Richard. And I think there might be one more group that hasn't reported back in. One more group with your takeaway or action item. Is that all the groups? Has everybody gone?
We got off on a sidetrack on a couple of things, but one of them that we were talking about was more opportunity, especially on the commercial side of buying stuff because of what's going on. Brick and mortar is going to take a hit. People have learned to work remotely, so they don't need as big an office as they used to. In fact, a couple of the people in our group, I don't want to call them out, said they may not have their employees come back to the office. They may make them stay remote. So, because that's going to be a fundamental change for a lot of people that we're going to be able to actually deal with now that in the past people wouldn't even consider.
Awesome. Thank you, Mike. Appreciate that. All right. We're almost right up to the top of the hour. So if you look down in the chat, Andrew put in the email where you can send your notes. If you had someone in your group that took notes of the top 2 or 3 action items, you can send that to SFR XChange at secondnature.com. It's right there in the chat for you. And thank you, everybody. Thank you for participating in that and for taking lots of information from John and making it applicable to your day to day.
Hey, I just want to say a special thank you for Adair and Michael. You can tell they keep the trains running on time, as we like to say. We're finishing right on the hour here. Isn't that amazing how we had a networking followed by a short, brief conversation, followed by a presenter, followed by more digital roundtables, and yet it all ends right. Yes, Karen, thanks for the virtual clapping there. Yeah, Richard, the thumbs up. That's great.
That's awesome.
Hey, thanks to both of you, and thanks mostly to all of you. You're the ones who, if you haven't noticed, all the content that's being created, it's the conversations that you guys are having. I mean, we saw, I think, 4 or 5 dozen individual takeaways on client acquisition, cool ideas. A couple we even heard back reflected today, things like Airbnb rentals being converted into long-term rentals is a huge business development opportunity. People were talking about some of these housing developments where build to rent isn't thriving or it's oversupplied, reaching out to them to offer management services. I won't even name the other 12 that were probably in an email some of you got, but if you're watching the YouTube stream, I just want to share that we're trying to increase our capacity for the Zoom meetings themselves. We're trying to share more than just one invite email, which is about all we have the capacity to pull off in addition to running these events. And so, yeah, when you see the invite emails come out, make sure to jump on it quickly so you can get in these conversations in the room. Otherwise, we'll share the recordings and all the great notes and things you guys come up with together in our XChange library. So keep an eye out for that and have a great Tuesday, everyone. Take care.
Bye, everyone.
Thanks, everybody.
See you later.
Thanks, Andrew. Thanks, Adair.
Yeah, you're welcome.